All right, today we're really going off the beaten path. We're going to dive deep into a company that I'd bet most of Wall Street has never even heard of. Truxton Corporation, ticker TRUX. Now, this is a tiny bank. It trades over the counter, but, and this is the key, its performance metrics are absolutely top tier, rivaling some of the best in the business. So let's break down what's going on here and what the real investment case looks like. This is really the core question for any investor who's trying to find an edge, right? How do you find those hidden gems? Truxton operates miles away from the Wall Street spotlight, which makes it a super interesting puzzle to solve. Is it a diamond in the rough, or is it just a high-risk gamble? Let's find out together. So here's how we're going to tackle this. We'll start by figuring out what makes their business so unique. Then we'll look at the industry they're in, check out their financials, get real about the risks involved, and finally, we'll wrap it up with the classic bull versus bear debate. Okay, so first things first, what exactly is Truxton, and what's their secret sauce? Well, let me tell you, this is not your typical neighborhood bank. Truxton, based in Nashville, is absolutely laser-focused on a very specific type of client, the wealthy. We're talking high net worth and ultra-high net worth individuals and their families. These are people whose financial lives are way, way more complicated than just a simple checking account. The whole company is really built on three interconnected pillars. First up is wealth management. That's kind of the heart of their business. Then you have private banking, which handles things like custom loans and deposits. And third, there's capital advisors, which is like their own little boutique investment bank, helping business owners sell their companies or make other big moves. And here is where the model gets really, really smart. These three divisions, they all feed each other. Just imagine this for a second. Their capital advisors team helps an entrepreneur sell her business for a huge sum. That creates a massive pile of cash. So where does that money go? Well, it flows right back into Truxton. It goes into their wealth management arm to be invested and into their private banking side for their day-to-day needs. This creates what you'd call incredibly sticky clients. The cost and hassle for them to switch to a competitor, it's enormous. So it's a fantastic model, for sure. But how on earth does a small firm like Truxton survive against the absolute giants of the financial world? Well, it all comes down to the way the industry is structured. First off, the market they're playing in is massive, and it's growing fast. Thanks to huge trends like the Great Wealth Transfer, baby boomers passing their wealth down to the next generation, the demand for these kinds of specialized private banking services is just set to explode. That's a powerful tailwind pushing the whole industry forward. You see, the wealth management industry is kind of turning into a barbell. On one end, you've got the mega banks, your JP Morgans, offering cheap cookie-cutter products to everyone. On the other end, you have high-touch boutiques, just like Truxton, offering personalized, high-value advice for a premium price. Truxton has smartly decided to avoid the squeezed middle and compete on service and expertise, not on price. And all of this works together to build Truxton's competitive moat. Their integrated all-in-one model is really hard for the giant siloed banks to copy. Their culture is all about being a fiduciary, acting in the client's best interest, which builds incredible trust. And their niche focus lets them totally dominate in a wealthy, booming city like Nashville. Okay, a great story is one thing, but as investors, we need to know if that story actually translates to the bottom line. So let's pop the hood and look at the numbers. And the answer is a resounding yes. Truxton's normalized return on equity, or ROE, is over 21%. Now, ROE is just a measure of how well a company uses shareholder money to make profits. To put that 21% in perspective, most banks are thrilled if they hit the low to mid-teens. This kind of incredible profitability comes directly from their business model, which is light on capital and heavy on high-margin fees. And for shareholders, this profitability isn't just some number on a page. It's returned directly to them. The stock pays a forward dividend yield of around 3.7%. That's a really significant, tangible return, cash in your pocket, especially for a company that is also growing. It just shows that management is serious about rewarding their investors. When you put it side by side with a regional competitor, the difference is just crystal clear. Truxton's ROE is substantially higher. It just hammers home how powerful their specialized model is. It is simply a more profitable, more efficient machine. And, it all comes back to this one simple but really powerful idea. The company's founding principle is just do the right thing. And that's not just some marketing fluff. For their clients, who are literally entrusting them with their family's legacy, this culture of trust, of being a fiduciary, is the single most important product they sell. It's what allows them to charge premium fees and create those sticky multi-generational relationships.
All right, the story so far is pretty impressive, I gotta say, but no investment is perfect. To be responsible investors, we have to flip the coin over and look at the other side. What could go wrong here?
So there are definitely some risks that are specific to Truxton's model. Key person risk is a big one. If a star advisor decides to leave, their clients might just follow them out the door. Their focus on wealthy clients and the Nashville market also makes them vulnerable if that specific demographic or city hits a rough patch. And of course, let's not forget, they're a small fish swimming with sharks who have much, much deeper pockets.
But this right here might be the single biggest risk. Institutional ownership is basically zero. So why? Well, it's because Truxton trades over the counter, or OTC. It's not on a major exchange like the NASDAQ or the New York Stock Exchange. That, plus the fact that they don't do a ton of SEC filings, just scares away the big investment funds. It hurts the stock's liquidity and, frankly, keeps it hidden from view. For an investor, that is a major hurdle you have to be comfortable with.
And on top of all of that, you've got the risks that affect the entire industry. A huge chunk of Truxton's revenue is tied to the value of the assets they manage, so a big bear market would hurt them, no question. Shifting interest rates can squeeze their banking profits. And for a company built entirely on trust, a major cyber attack could be absolutely devastating. Okay, so let's bring it all together. The good, the bad, the ugly. It's time for the bull versus the bear case. The bull case is actually pretty simple. You're getting a world-class, ridiculously profitable business with a great management team and a long runway for growth. The bear case is that it's a small, kind of risky company. Its OTC listing and the intense competition could put a ceiling on its potential. That's the dilemma. So if you're interested in this company, what should you be watching? Well, keep a close eye on their ability to keep attracting new client assets. Definitely monitor their expansion into new states, like Georgia. That's the big test of whether this model can scale. Keep an eye out for continued dividend hikes and share buybacks, and the biggest potential catalyst of them all, an uplisting to a major exchange. That would open the floodgates to a whole new world of investors. And that really brings us to the final question, doesn't it? Is Truxton one of those rare opportunities to buy a fantastic, long-term compounding machine before the rest of the market even knows it exists? Or is it just a small, vulnerable player that's eventually going to get overwhelmed by its giant competitors? The answer really depends on your own personal tolerance for the unique risks and the potential rewards of swimming in the deep end of the market.